India is a country with 1/6 of the world's population, and its median age is lower than developed economies, set to become world's third largest economy by GDP, per capita income having a room to rise. This is the demographic dividend of India and the runway for growth it holds. But how does one capture that through the portfolio? It is via consumption sector. India is young at a 29-year median age, with the working population in large numbers, fastest growing middle class by annual household income. Middle income group represents approximately 31% of the population and is expected to be at approximately 47% by 2031. With India's resolve to be the third largest economy in the world by GDP, consumption, which contributes to the tune of 60% to India's GDP growth, is expected to keep pace. As India progresses on its path to become a $5 trillion consumption economy by 2031, India's middle income group is expected to drive more than 50% of the incremental consumption. Tata India Consumer Fund is a deep expression of the belief in the longevity, growth, and relative predictability of earnings of the large consumption sector in India. The idea of Tata India Consumer Fund is to capture the consumption boom of India. Within the consumption sector, fast-moving consumer goods is more stable as compared to discretionary with 60 to 100% penetration levels. But penetration levels of discretionary segments are lower at around 25% and thus positioned for relatively higher growth. Tata India Consumer Fund portfolio is positioned to capture these sectoral trends of growth. Concepts like food processing companies, quick service restaurants, ready-to-eat food are expected to do better and for long term. As more women join the workforce, we think the growth in consumption sector in India is likely to be led by themes which make the women's life easier. This forms the largest segment under FMCG. Tier 1 cities would see more buying across healthcare and personal care products. Approximately 33% of the country's population is estimated to be between 18 and 35 years old, and BMI expects this group to spend big on electronic. ACs, refrigerators, washing machines stand at 25% penetration levels. Tier 2 and Tier 3 cities would witness more buying of appliances. With government thrust on housing schemes, the fund also captures the consumer durable segment. Building materials like paint, tile, sanitary ware, cables and switches, electricals, plyboards. Technology adoption has increased. Going digital provides a great leverage to businesses, helps them optimize costs and drive revenues. With increasing urbanization, access to internet, large young population of India is conveniently buying online, leading to e-commerce boom. India is the fourth largest consumer market by value. On the GDP front, last decade government spending on consumption has been large. Last 5 years investment expenditure has been increased. Going ahead, India is expected to have a good balance towards investments, expenditure and consumption expenditure. Added to this predictable growth and low volatility of the sector, consumption sector behaves like a true defensive sector as it is not linked to global growth. Looking at the last 12 years historical risk return matrix, when all sector performances and standard deviation is considered, it comes out that consumption sector has remained as much time in quartile 1 and 2 but with half the volatility.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.